where they share the cost of developing those projects together. Now, what used to be the case was that federal government would have to bring its own share and the IOCs to bring its own share, but after a while, federal government couldn't meet up with payments. So it's those backlog of payments that we should have met up with that we didn't meet up with that were owing as cash call arrears. Now, it had reached a total of close to about $8 billion at the last count. And I believe that was what we've now sort of restructured into about 3 different payments. A part of it has been shaved off as a sort of haircut on the debt. A part of it is meant to be paid now, and then a part of it is going to be paid from 2018 when we have some new production coming on stream. Now, what this structure does, the current structure does, is that the IOCs, the JV ventures or the joint ventures are now going to be allowed to go and raise money for themselves as a company. Now, what this means is we're moving closer to the incorporation of these joint ventures. We're not there yet. There's still a few more steps that need to be taken, but with the new structure in place, the JVs are meant to go and raise money for themselves, and then when the projects are brought on stream, those funds are repaid, and then the shareholders get their revenues after those funds have been repaid and future capex has been set aside.
Now, Dolapo, you mentioned that, of course, we're waiting for production to come on stream for us to begin to know how much revenue we can get. And I remember that Focados, of course, is also coming on stream. We have Kwaibo also on tap, as well as Bonny Lights. But looking at the huge debt, how do you think the federal government is really going to be able to pay it? You've talked about the structuring in 3 parts. But even at that, It seems to be a very hard bone to break.
Well, yes, because, again, the good thing is, again, which is part of the positive, is that it doesn't touch our current production. So it's when we bring new fields on stream and we're able to bring significant volumes on stream, it's out of the revenue from those fields that the repayment will be made. Now, I believe what we are meant to pay from 2018 is about $5 billion. And if you split that down to about $1 billion a year or so, that's easily something I believe we can cover if we are bringing on stream as much as we plan to. Because again, from 2018, we expect to see the first field should be Egina. Egina should kick off first. And then we should also have Bonga Phase 4. After that, we'll start to have some of the various other projects by ENI, maybe Zabazaba, Nsiko, Uge, Bosi, and some other fields like that. So there are a couple of other fields and the total we expect is that these fields should add at least 500,000 barrels per day to Nigeria's production. I'm thinking by 2022, 2023. So if we are able to bring those fields on stream as planned and on track, with each additional field we bring on stream, we should be getting additional revenue from which the payments will be made. So it's why I'm saying that, look, maybe there's some caution to how much the new fields that are coming on stream will be able to add to our revenue, because so much of it will be going out to make repayments already.
But that's barring any vandalism or shortings from any of these any of these streams.
Now, the bulk of these fields are deep water fields anyway, so we don't expect them to have such vandalism issues.
Now, OPEC has decided to freeze output. That's no longer a story to boost the oil prices. But how can this help the federal government raise its revenue within the period to repay the debt?
Yeah, I think the OPEC decision is a good one. Again, but you see, to put a bit of balance, we're seeing 2 counteracting forces in the market at the moment, and I'd just like to quickly mention that, because even with the OPEC decision, we had expected that if once the cuts start to happen and we start to see some fiscal tightness, or we start to see some tightness in the fiscal market for crude oil prices were supposed to jump to about 58, which they did, and then subsequently above 60 and so on, and possibly pause somewhere around 62. But America has taken a decision to hike interest rates, and there's a likelihood that they will continue to do so even in Q1 2017. And if they do that, the dollar continues to strengthen, and the more the dollar strengthens, the more expensive it becomes to buy crude for refiners and importers of crude oil, and the more crude oil prices fall. So those 2 forces, the OPEC cut, which is tightening supply, and the more expensive dollar, which is making demand a lot more expensive, will continue to balance out crude oil prices. But over the longer term, as we start to look beyond 2017 to 2018, 2019, 2020, I think the market will still continue to remain tight, but we could likely see some more balance in the market, and we could see some slightly higher prices, maybe in the 60s, which I think will be positive for Nigeria, especially if we're able to raise crude oil production back to 2 million barrels per day by then.
But then you see, we still have the issue of governance issues. So what issues have been put in place for the new policy to reduce substantially the amount of time it takes to implement the new contracts?
Well, that's really a key issue in the industry. And one of the things I think is key right now is we need to see the PIGB passed. That's the Petroleum Industry Governance Bill, to provide some sort of significant clarity about how the government really wants to manage and run the industry, if there are any changes to the current structures. I think, again, one thing that really needs to happen is, like you rightly mentioned, the contracting cycle is quite long. It takes maybe average of about 2 years for some contracts to be signed and off eventually. But with the new structure in place where the JVs can raise their own funding, I think those cycles will be greatly reduced.
So that, of course, is still tied into the 7 big wins that we're hoping to see push the oil and gas industry to winning ways to where it's supposed to be, enviable positions. And we're still talking about the Petroleum Industry Governance Bill as well.
Yeah, exactly. So, and that's the key. In fact, that's a very cardinal part of the 7 big wins. We need to get the regulation the regulation aspect sorted, and I think the ministry is really placing a lot of emphasis on that at the moment. So, I mean, almost every program that NNPC has had recently, you notice that they've involved the Senate Committee on Petroleum Matters. They've always had them involved to ensure that, look, this is what we're trying to do. This is what we're trying to achieve. You see how the regulation plays a role and how it's important to get this passed. So, the discussion started some weeks ago. I believe we had a public hearing and we had some discussions in-house. When the Senate closes, I believe when they resume in January, they will likely start up on that discussion again. Hopefully, Q1 2017, we should have that regulation passed. Now, when that is passed, that can pave the way for other parts of the PIB to be passed. The fiscal terms, the regulation of the downstream, and other aspects of the PIB. And then so that we can start to see some investment back in the country. But more importantly, the exiting of the cash calls, unlocks some amount of revenue, especially from the IOCs, to start investing in the country.
Dolapo Oni, Head of Energy Research at EcoBank, thank you so much for your perspectives this morning.
Thanks for having me.
Our Business Morning continues after now. Stay with us.